big move in the markets. You are seeing everything from banks to NBFCs to autos to white goods, staples. All of it is looking extremely cheery. Not like the weather, but yes, the market screen is definitely looking quite bright out there. But let's chat a little bit more. We've got Hiren Ved, Director and Chief Investment Officer, Alchemy Capital Management, joining in on the show right now. Hiren, gloomy skies, but extremely bright market. I don't think the markets could have asked anything more than the Independence Day bonanza by the PM, right?
Yeah, I mean, absolutely. I think this was really the missing link in the economy, which is consumption was struggling. And I think finally the government has done something that was quite unexpected in that sense. And therefore, it's a very positive surprise. And, while the actual rates are not out, but I think between the 1 trillion of tax cuts in the budget and maybe somewhere between 1.25 to 1.75 trillion of this consumption stimulus, I think means something very substantial from an overall stimulus. So I think you now have both monetary and fiscal policy, which is substantially pro-growth. And I think that is very, very positive for the economy. And I think this festive season should see very strong consumption trends.
Fingers crossed, because if this doesn't propel consumption, I don't know what else would. But Hiren, given that tax cuts are yet to play out, right? Credit growth expansion is also awaited. But it appears that consumer growth agenda is very, very critical for the government right now. As an investor, how are you to read into this? Because consumption, staples was a very under-owned segment in the market. The market has always been fancied by defense, BFSI, even autos to some degree. Do you take a complete rejig? Because investors in that sense have been completely caught unaware, right?
Yeah, sure. I think what had happened was that some of the consumption exposure had moved from FMCG staples to retailers and quick commerce companies, right? Because actually they were growing faster than the staples companies, and I think that's not likely to change in my view. So while staples will benefit, but I think a leveraged play on staples is actually to buy the quick commerce and the large big box retailers. I think they should benefit significantly from the volume growth that will ensue as a result of the tax cut. So I think the entire basket should do well, in my view. And people can pick and choose whether they want to buy staples or they want to buy autos or they want to buy the platform companies, which will also benefit as a result of that.
Okay, eternal fan are you, Hiren, quote unquote. But how much more can you buy at a level of 320?
Yeah, as I said, I mean, I think the whole buffet is laid out, right? So you can pick up, you can eat more of what you like, or you could eat something else which is not on your plate. So it really depends on how investors are positioned. But I still believe that there is a significant upside to the platform companies because I think that they are clearly a derivative of growth on top of FMCG growth. So, I think the whole ecosystem should benefit as a result of this.
That's the take on some of those quick commerce giants. Hiren, hi, morning. Just want to flag off some of the unexpected positive things that we've seen in the recent past, and they've been quite a lot. First, that RBI bazooka coming in, the tax cut from the budget, and now this GST fillip. Would it now be safe to say that at least on the consumption or even in terms of overall macros, there are only good days that lie ahead?
Yeah, I mean, I think for now, as I think our macro was always very strong, and that was also reflected by the fact that India, after a long pause, got a ratings upgrade. I think we wouldn't have got a ratings upgrade if our macro was not strong, right? So I think other than exports, where there is a little bit of cloud because of the trade and tariff uncertainty, I think what the government has done is very smart, which is that you strengthen the domestic economy, you strengthen your domestic consumption, and that should blunt, some of the impact of slower exports that might ensue as a result of the additional tariffs that have been put on India.
Hiren, good morning. Yes, consumption and even before the festive season, all of these announcements absolutely explain that it's going to be a very good festive season, in particular for the consumption basket. But then let's talk about the defense sector as well. And the government has always been watchful about the development of the defense sector. And in his speech, Prime Minister Narendra Modi, on the occasion of 15th August, he did talk about Mission Sudarshan Chakra, which is planning to develop indigenous aerial defense system by 2035. Now, if we talk about the defense as well as the shipbuilding space, expensive valuations after a sideways momentum, do you think it's going to be again a positive upside for the sector?
Oh, undoubtedly. In my view, I think while consumption has got a near to medium term boost, I think defense is a 10-year story in India. It's a decade plus story. It is very strategic. We cannot forget the fact what happened just a couple of months ago. And as the world geopolitics keeps changing, and if you see what has been happening of late, at least the apparent tilt that the US has towards, Pakistan, it makes it even more imperative for India to double down on domestic defense technology, and I don't think that's going to change. So while in the short to medium term, we may all celebrate the consumption boost, but I don't think that takes away from, from the importance of this strategic sector. And I think that what the Prime Minister has laid out is very, very clear. I think defense spending will continue to rise, and more importantly, domestic defense capabilities will have to be built at an even faster pace than what we've done in the last couple of years. So we're still very, very bullish on defense.
Right. Okay, Hiren, so you've got defense, you've got banks, NBFCs, you've got the food aggregators. What else in the buffet?
I think if one more thing that the Prime Minister mentioned was semiconductors, right? And therefore, I believe that another ecosystem which is likely to accelerate and grow, in fact, to some extent will also benefit, is the EMS sector. I know there have been some recent accidents there, but again, if you look at the long-term strategic direction of where India wants to be, I think there will be significant investments in the entire semiconductor ecosystem, and therefore all players who are likely to benefit from this? Is also, like defense, going to be a very, very strategic sector? And I think one of the things that the government is now doing is that with the thaw in relationship with China, you could see more FDI and joint ventures happening in semiconductors and EMS space in India. And that should accelerate the build out. So that's another sector which I believe should grow multifold even from here. The base is still relatively small in absolute numbers, but I think there is a long runway for growth.
Sure. But Hiren, what about the remainder of the fiscal year? You know, you've got a government which will do whatever it takes to try and spur consumption, and the economy is in good hands. But the big question mark still remains on tariffs, right? You don't know how that story is going to play out. Any return expectations for the remainder of the year at an index level?
I have no doubt that we are, with or without tariffs being resolved. Eventually, I think it will be resolved one way or the other. I know it's a little bit of an irritant, but I don't think that it is something which is very significant. My sense is that we should be able to take that. Maybe some sectors will be more impacted than others, and I think the government will look at helping some of those sectors fiscally to manage the tariff situation. But I have no doubt in my mind that Nifty should hit a new high before the end of the calendar year.
Optimistic on that front, Hiren. That sounds very good and very cheerful, and we're all hoping for that. So fingers crossed as well on that note. But also want to understand a little bit more on the healthcare space. Now, this is something that you've liked, and we've heard in PM's speech that he's pushing for affordable medication and healthcare back home.
And now, obesity control.
Oh, well,
I almost thought he was hinting towards GLP-1 intake.
Well, yes, so those are some key themes on the healthcare front that we've noticed. And Hiren, while this is all sentimentally positive for the consumer, what impact do you think this is going to have on the players that operate in those sectors? Do you think price cuts or maybe some government compensation? How do you think this whole affordability angle in healthcare is going to play out?
I think on the healthcare side, my view is that the best way to play it is through the hospital sector, right? Because we have seen that post-COVID, the sector has done phenomenally well. India is still massively underpenetrated. And I think there is significant improvement in margins and return profile. And there is a lot of investments that is required in this sector. And this sector holds a lot of promise. You mentioned about, healthcare costs. I think the government is always focused on, with the various programs that they have, to improve access to generic medicines, to people at the bottom of the pyramid through the Jan Aushadhi scheme and so on and so forth, which means that, at least the general generic medicines should be available at affordable prices. But I think in general, health insurance and hospitals are a better way to play the healthcare sector at this point in time in India.
Hiren, while we are talking about all of these positives, one concern at present is the export slowdown. What measures can drive domestic growth to offset weaker exports, and at the same time, can consumption and government spending fully cushion this export slowdown?
So again, I think that, that's one area of challenge. We will have to wait and see what the government does, but I think the government has indicated that they would want to help some of the sectors fiscally, especially textiles and leather and many of these labor-intensive export sectors. I think one of the reasons of going for a significant GST rejig was to create domestic demand, right? And cushion some of the impact that the exporters might have. So I think in the near to medium term, it could be challenging for exporters, but I guess the exporters will have to find new markets in case we are not able to resolve the tariff issue. I'm still hopeful that, at some point in time, over the next couple of months, we should be able to arrive at a more consensus-driven trade policy. But having said that, I think in the meantime, we have to do what is in our hands, right? We can not do what is not in our hands. And I think what is in our hands is to stimulate consumption domestically. And I think that's what we are doing. And we'll have to wait and see as far as what happens on the export front.
Yeah, we do. So, Hiren, tactically avoid for now exports altogether?
I would say that probably one should not rush in there. But I think I also believe that most of the bad news is already in the price, right? So if you have a really long-term view, you could actually use this as an opportunity to invest. But until this uncertainty is lifted, we may not see immediate gains, but it could be a good entry point if you want to really take a long-term view. Because eventually, I think everybody adapts. And I think the exporters will adapt as well. It may take a little bit of time. Maybe this year might be lost if nothing happens quickly on the trade front. But things might improve by the next export season. So it's a slightly longer term call, but the bad news in my view is already in the price.
Okay, but here's some good news. I think we've already made it to that 25,000 mark on the Nifty, haven't we? Or were we too early to flash that on the screen? We'll just come up for you on, what the Nifty is. The futures, of course, are already there at 25,041. And yeah, I think we had a touch and go with that 25,000 mark on the Nifty as well. So clearly bulls in control. But Hiren, the other aspect for the markets to digest has been the earnings season, and pretty lukewarm, you'd say. No big upgrades, select, key downgrades coming in. Basis that, have you increased your overweights or underweights anywhere?
No, I think, yeah, as you rightly mentioned, right? I mean, I think this earnings season was neither too good nor too bad. But I think that markets are forward-looking. I mean, this earnings season is over. We will have to wait and see, because what happens when you announce tariffs, GST cuts in advance, some discretionary high-ticket consumption could get delayed because people will wait for the actual prices to fall. So it is quite possible that you might see actually initially a slowing down in consumption in the near term. There might be some inventory buildup that might happen. And then when the clarity comes in and the prices are reduced is when the real demand should pick up. So I think the first half earnings story is likely to be more neutralish, but I think the second half should be very, very strong, especially the third quarter for consumption. But as we all know, markets are forward-looking, so they will probably overlook, this little bump over the previous quarter and this quarter. But my sense is that, very difficult for Nifty earnings to grow beyond 10-12%. I think the growth lies beyond the Nifty. And that is where all the action is going to be.
Indeed, and the screen is telling you that already today, given the stock-specific moves that one is seeing in some of those pockets. But Hiren, always good having you on the show. Thanks for your time.
Thank you so much. Thanks for having me.
Okay, that's that on the markets. We made it back to 25K. You've got big leadership moves